Kellogg Chairman and CEO Steve Cahillane joins us now for an exclusive interview. Steve, it's great to see you.
Great to be with you, Sarah. Thanks for having me.
If you pick up some of the commentary on today's earnings calls from Walmart or Macy's, they're talking about teeth whiteners selling out or mother of the bride dresses or suits. Americans are going out again and going back to work. Is that hurting your business?
No, it's not. And, we're delighted that people are able to, get back out into the way that they were acting pre-pandemic. But what we're seeing from a consumer standpoint is that compared to 2019, there will still be a lot more stay-at-home activity. And so 2019 as a base year, I think, is the right way to look at it. And when we look at 2021, although people are more mobile, they're getting back out again, they're still at home and enjoying eating at home more than they did in the base year 2019.
Is that why we've seen cereal shortages? What is going on there? Frosted Flakes and a number of other higher prices and shortages seem to be some of the complaints from consumers.
Well, if you go back to the beginning of the pandemic when it first hit, nobody was prepared for the type of surge in demand that happened. And so our inventory levels, as well as our retailers' inventory levels, went to zero and into negative territory. And then during the course of the pandemic, we were hard at work at keeping people safe, keeping our factories running, and meeting demand, never with the ability to really rebuild inventories or increase our overall capacity. We're now at the stage where we can increase capacity. We've been working on that. And so in the back half of the year, you'll see Tony the Tiger back on shelves fully stocked. We never really ran into any out-of-stock situations, but our ability to promote and really merchandise was a lot less than it was pre-pandemic.
And Steve, is the outlook now that we're past the worst of the pandemic, particularly in the U.S., or when you look at certain international markets, are you fearful that there are sort of darker corners ahead?
Yeah, so Wilfred, clearly in the United States, we're at a good place right now, and you see obviously the virus infections going down. You see people getting vaccinated, and therefore you see a lot more mobility. But around the world, you're exactly right. In countries like India and Brazil, other developing markets, the pandemic is by no means waning. And so as you travel around the world, it's really a different set of circumstances depending on which country you're talking about.
So what is the inflation story, Steve? How much have your costs gone up, and are you passing that along to the consumer in the form of higher prices or taking it in margins?
So, when we talked about our guidance last week when we announced earnings, we did say that we were going to protect our margins despite an overall inflationary trend. And the inflation is real. It's coming through. You guys have been reporting it. It's obviously pervasive. Now, when you look at the United States as an example, you have a very competitive retail environment, and you have a very competitive environment in consumer packaged goods. So you have a lot of pressure to, cover as much of that cost inflation as possible through productivity, through joint activity with our retail partners. But this level of inflation is unlike that we've seen in many, many years. So yes, you will see pricing increase at the shelf and at the retail level. I think it's inescapable based on the type of commodity pressure that we're seeing across really everything. It's hard to find something that's not inflationary at this moment.
I mean, so interesting to hear you say that so clearly, that the margins won't be protected by other means. This is by passing on the prices inescapably, I think you just said. For a prolonged period, do you expect, or temporary?
It's a great question, and I think it's unknown at this stage whether or not this is a one-time step up based on all sorts of extraneous factors, a lot of them COVID-related, or is it the beginning of a more year-on-year inflationary cycle? I suspect that it is more of a one-time step up, where you're seeing everything from logistics costs, shortages of drivers, things that happened all the way back to the Suez Canal that have really disrupted supply chains fairly significantly. And so I think there's a lot of strong evidence to suggest that this is more of a one-time reset step up than the beginning of a more inflationary cycle.
Shepard Smith here. Thanks for watching CNBC on YouTube.